I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews, we have back with us Alejo Pinto, co-founder of Pontem. Alejo, welcome to the show, and thank you for coming back and taking the time.
Yeah, it's great to be here. Really enjoyed my first time and happy to be back here again.
Yeah, I learned so much about the Move ecosystem and what Pontem Network's been working on in Lumio and the other applications. That was about 6 months ago for those who didn't see our first interview. I know a lot of updates have happened since then. A lot of things have happened in the industry since then, and other Move ecosystem updates. I first heard of it actually from you, and now I've been seeing it everywhere. I feel like it's part of the forefront of innovation. So I'm excited to dive into that. I would love to start off our conversation from those who aren't familiar with our first interview or with Pontem and Lumio and haven't seen it. You sort of give a high-level overview, then we can dive into the latest after that.
Yes, definitely. So Pontem is a product development studio, and we're focusing on 3 core products. One of them is a wallet that's multi-chain, supports Aptos, other Move ecosystem projects, as well as EVM and Solana VM, so Solana itself. So on Pontem Wallet, you can use it on Ethereum, any of the L2s, on Aptos, and then soon on other Move projects that are going to be launching on mainnet, Lumio being one of them. So we can go into that. The second product is an AMM built on top of Move. So fully immutable, permissionless AMM to swap with no intermediary, any 2 assets, covers constant product and concentrated liquidity. That one is in stages of further decentralization. A governance token is launching very soon. And yeah, that means that ownership will be transferred over to the community to set parameters, govern fees on the protocol, as well as grants and future development. So yeah, very exciting component of any decentralized protocol as the ownership gets transferred to the community. And then lastly, we have Lumio, which is still in development, still in testnet. We recently released onto public devnet on Solana. And yeah, that product, I'm very excited about it because it's solving an issue that developers have today, which is vendor lock-in based on which virtual machine or language you chose to build. And Lumio essentially is a framework to deploy with any virtual machine onto major L2s and L1s. Right now we have a deployment on Optimism, and we recently released on Solana. So imagine being able to take an application from Ethereum or from Aptos, deploying it on Solana without having to make any code changes, vice versa, take an application from Solana or Aptos and being able to deploy it onto an Ethereum L2. So yeah, that's an issue that exists for developers today, and something we identified ourselves building on the Aptos ecosystem with Move. So even though Move definitely is a great language, has a lot of benefits like improvement on performance and safety, you're vendor locked in because all these L1s that have native assets like ETH, OP, Sol don't support Move. Therefore, if we wanted to deploy our applications, we'd have to migrate them, and now you're having to maintain 2 code bases, which incurs a lot of technical debt and resources. So yeah, with the solution, we're hoping to solve a problem for ourselves and a problem for the whole ecosystem. And yeah, we're hoping that this will be useful for developers.
That's really incredible. I would love to dive into each of those, specifically on the Lumio side. That problem of, hey, there's a huge network effect on the Ethereum network and some of the other blockchains where, just because they were sort of the first there, a lot of huge applications are there now. But the technology, to some, they would argue it's antiquated, or we could have better, more secure technology with newer languages like Move or these other sort of multi-chain, being able to move around applications. So I'd love to hear a little bit more on that update for the multi-VM. And I'm curious more about Move VM, but I feel like this is a great stepping stone in that, yeah, you don't want to have to do everything twice. And the developer lock-in, just being a developer and not having to choose which language, okay, I'm forced to go to this blockchain. I feel like that's a huge hindrance for crypto adoption overall.
Yeah, exactly. And that's where we started. So as I mentioned, we built out applications on top of Aptos with the Move virtual machine. And as we wanted to continue expanding to offer our users ETH, Sol, this is the issue we ran into, right? We can't really easily deploy our contracts there, smart contracts, which is the entire application or the business logic. And therefore, we started building for Move. And as we talked to more developers, we realized, we're not the only people that have this problem of wanting to expand to other ecosystems so that your end users can access native ETH or native Sol. Could be native Bitcoin in the future, native TON, etc., without having to migrate their entire application. So if you notice, Uniswap is deployed across BNB, Avalanche, a host of EVM compatible L1s and L2s, and something like Radium or Jupiter or Liquidswap can only be deployed on one. So yeah, after talking to developers, we realized, hey, this is an issue bigger than us. If we can solve this issue for ourselves, we can solve it for a whole host of other people. So we decided to build a framework in a way where it's extensible, so you can add on more virtual machines. Initially, we're starting with the Move VM, the SVM, and the EVM, but you can easily also include WebAssembly. There's others like Cairo, etc. So, but yeah, we think by focusing on these three, we're covering a large portion of the market, and application developers that are building with these, that have already built with these, can easily migrate and deploy on various chains. And then if you're a new developer, you're now also not vendor locked in, and the decision to build with Move, for example, on Ethereum, or build with EVM on Solana becomes a lot easier, and you just have a lot more freedom of choice as you're deploying.
Yeah, no, that's really exciting. So I think Uniswap is a great example. It has a lot of liquidity locked on those EVM chains. If you go to the top right of Uniswap, you can see all the chains, mostly just the layer 2s on Ethereum and BNB. So with this update, could they go into Lumio and say, hey, let's launch this on Solana, Aptos, any chain?
Yeah, that's exactly it. So the way that it's deployed technically is as a layer 2. So let's go through the example of Solana, where right now, Uniswap can offer their users native Sol. It could be bridge Sol, maybe through Wormhole or something like that. But if users want a native Sol, they couldn't access it, or any of the meme coins that are trading on Solana, etc. So if Uniswap wanted to offer their users native Sol and coins from Solana, they could deploy on Lumio, which is going to be an L2 deployed on Solana. People can then roll up their assets or bridge their assets over. This is as trust minimized as possible. Rollups on Ethereum, it's architected in a very similar way as rollups on Ethereum, using fraud proofs. We're also researching validity proofs, but you're essentially trust minimized, rolling up assets and able to then trade them onto this L2 with the same application that is running on Ethereum without having to make code changes. So you can easily just deploy that EVM contract and then offer your users the native assets from Solana.
Wow, that's incredible. I feel like it's a huge hurdle that dApps, like all of the DeFi lending dApps, would want to expand to new ecosystems. So would that mean that the value locked in to, if the dApp is on Ethereum, that could easily be moved without extra security issues or vulnerabilities by I think traditionally using bridging, there's a lot of vulnerabilities to move assets to other chains.
Yeah, even recently there was a hack on the LiFi bridge. It's arguably whether that could have been prevented with another smart contract language like Move. But yeah, I mean, bridges are definitely one of the core central points of failure. So a lot of end users to this day still don't feel comfortable using bridges to swap assets or move them around. So I would argue, obviously a rollup still has a bridge, but this is secured in a trust minimized way where the whole rollup, the whole settlement of the rollup is secured in the same way. So there are fail safes where, let's say, if the sequencer was compromised, people can still force withdraw their assets from the bridge and go back to the L1. So it is, even though it's technically a bridge because you're, bridging assets from the L1 to the L2, the implementation of it is arguably safer than using something that's cutting across different L1s. So yeah, from an application developer, if you want to offer your users the safest way to access native Sol in your application, this is definitely a great way. Something that I didn't mention, but is also a huge benefit of rollups is that you're able to go faster, have more bandwidth, and have lower costs than the L1 itself. And on so this is definitely useful on Ethereum. Obviously, Ethereum, as we know, is very slow and expensive. However, relatively, the same scaling solution that helps solve some of these problems for Ethereum can be applied to these faster L1s. So even though Solana is relatively cheap to Ethereum, a transaction still costs, some pennies, maybe like most transactions, a few pennies. And then during periods of congestion or more complex transactions can cost 10, 20 cents. So if you're able to make those costs orders of magnitude cheaper for an application that wants to enable high frequency trading, let's say you want to do gaming on chain. So acquiring experience points as you're chopping wood, let's say on an MMO RPG, all that can be done on chain at a fraction of the cost on an L2 while still having settlement and still having compatibility with assets from the L1. So yeah, this is a huge benefit as well of using an L2 even in these more high performance chains. And I think it's a trend we'll continue seeing.
Yeah, no, it's really exciting to hear that. And now with this latest update that happened, from what I understand, this is like a devnet release. So the developers are just starting to test the migration potential, and we're not actually moving Ether from Uniswap onto these chains yet.
Yeah, so what we have deployed now is testnet on Optimism. So the idea is that we're gonna merge this implementation onto the Optimism sequencer once they go with a shared sequencer. So you'll have compatibility with other L2s within that ecosystem like OP, mainnet, base, etc. Our goal with Lumio is to deploy various L2, a collection of L2s. We call this the Lumio collective. And essentially, each implementation, similar to Uniswap having a separate implementation on BNB or having a separate implementation on Avalanche, is going to be separate. So if Uniswap were to deploy onto Lumio on Solana, it would be an implementation on Lumio, which is an L2 on Solana. We call it Lumio on Sol. And then this enables them to have the same capabilities as, having been deployed on Optimism or Arbitrum, where you can swap native ETH, for example, on Uniswap on Optimism or Uniswap on Arbitrum. So, yeah, I mean, you wouldn't see, for example, BNB being swapped on Uniswap on Optimism or Uniswap on Arbitrum, but you do see, native BNB being swapped on there. So, to be clear, these are each L2 and L1 will have its own deployment, and then as an application developer, I can choose to deploy and be compatible with the Optimism L2 ecosystem, or the Solana ecosystem, or let's say the Arbitrum L2 ecosystem. So yeah, separate deployments, and similar as you would have separate deployments now. Now that obviously contributes to the issue of fragmentation of applications across these. That's not an area where we're focused, but I do think that solutions like intent, for example, intent-based cross-chain swapping will make the application experience a lot better for users. So the way that these intent-based protocols work is that essentially they look for off-chain solvers, let's say market makers, or it could be anyone really, to fill the coincidences of wants of essentially settling, let's say, ETH for Sol. So, but you still need those applications to be deployed on these networks for the settlement to happen between these. So if you're Uniswap, you're deployed on, let's say, Optimism, and you're deployed on Solana, and a user wants to swap OP for Sol through a user interface or a wallet, let's say, you can have a simple swap button that just covers all the, Uniswap deployed chains. And I believe this is what Uniswap is doing with their router. But essentially, you'll be able to say, okay, I want to swap my OP, which is on Optimism, for Sol, which could be on Lumio, deployed on Solana. The end user doesn't have to think about, do I switch the network? Do I have to bridge to, USDC on Sol and, do all these things with an intent-based solution or a router like Uniswap X. The user can just, choose the two assets, and then that order will get filled off chain, and then the user will get essentially the asset that they want. So they would get it on the chain where it's deployed. So yeah, that's, even though the fragmentation still exists, that there's solutions being built as well to help solve some of this fragmentation. But this is going to enable the base applications to essentially be deployed onto the networks where users want to use their native assets like Sol or ETH.
Yeah, no, it sounds incredible. I'm looking forward to seeing that in reality. And we've been talking a lot about Uniswap because it's a great example. But I want to dive a little bit more into Liquidswap, the AMM. I know you guys are the team's growing it out, and there's a token coming with further decentralization. Maybe you can start high level on Liquidswap and why it's such a great AMM in the way that it was built and where it's at right now.
Yeah, so Liquidswap is really the first core implementation of a constant product market maker with the Move language. As Aptos was launching, it's definitely a gap for this core infrastructure that makes up most of the trading in crypto. So we saw an opportunity to fill that. We built out the constant product and then recently released concentrated liquidity as well. And at its core, there's very similar functionality as a Uniswap or a PancakeSwap, which uses similar formats. I think as a whole, most of the technology for DeFi and even like L2s and L1s is I mean, you could argue this for most tech is relatively commoditized. So I think what boils down at the end of the day is, as these applications become useful, is one, small performance improvements. And I think this is where the commodity of the product starts to split off using something like Move over EVM. So with Move, you're able to run transactions. You're able to run transactions in parallel. So for example, if you have, as long as they don't collide. So if you have, for example, a market that's USDC Bitcoin and a market that's ETH Bitcoin, ETH USDC, you can have those. You can have two people, or like two transactions run in parallel, as long as they're not colliding. So you wouldn't be able to do like two transactions for ETH USDC, for example. But yeah, as long as they're not colliding in the account that they're targeting, you can run transactions in parallel. And this is a benefit of Rust-based virtual machines like Move and like the Solana VM. This is something that the EVM can't do out of the box. You might have heard of parallelized EVM as like an addition or modification to the EVM to be able to do this. So that's one benefit of using Move application over an EVM application. It's going to be marginally more efficient. Another one is safety built into the protocol. So especially around this new trend of extensibility for the AMM. So as if people are not familiar, Uniswap is launching with Uniswap v4 essentially hooks or applications that can be connected into the core Uniswap protocol or pools. So you can create these essentially custom implementations that can still use the core Uniswap protocol. So this opens up, this makes Uniswap essentially a platform for applications to be built on top of it. So as you are building out more applications, the risk of potentially shooting yourself in the foot with EVM being one of the main drawbacks to it, including reentrancy attacks, for example, or overflow errors, or something that can be. So the Move virtual machine has a native prover for doing formal verification, so that you know what the outputs of your code are going to be. You can definitely do this with EVM as well with Solidity, but it's not natively built into the virtual machine, so you're still relying on third-party libraries. So Move overall just has a lot more guardrails that prevent developers from shooting themselves in the foot, so that someone that doesn't have 10 years of experience building smart contracts can come in and feel more confident building applications on top of another protocol like this. So I think there's marginal benefits that these new languages and virtual machines will give applications, and I think that's something that definitely is going to give Liquidswap an edge over incumbents that are built over EVM. Another key component that we see as being a differentiator for these applications is the community and how the protocol is carried forward. So these protocols, these products, and I think it's a very interesting example, are becoming almost like little nation states or governments where you would think of like your own city, being within a bigger, nation state, like a state or a country itself. And I think similarly in these protocols, you're seeing like communities and overlapping communities, for example, within Ethereum, the MakerDAO community, the Aave community, the Uniswap community is a subset of the Ethereum community, which is a subset of the overall crypto community. And these tokens really are a tool for coordination. So you would imagine behind, and again, there's a whole spectrum of how these protocols operate and what parameters can actually be set by tokens. But a lot of these protocols, for example, let's say maybe Velodrome might be a better example, where very tied into the protocol itself, the token holders can vote for which pairs they drive emissions to. So the Velodrome token is emitted to liquidity providers that are providing liquidity, and the token holders can choose which pairs to drive those emissions to. Another utility of that token is that they get the fees from the pairs that they're voting for. So if, for example, I think that the Bitcoin USD pair is going to be very popular, I'm going to vote. If I'm an owner of the protocol, I'm going to vote for that. Getting more emissions, that should drive more liquidity because that pair is getting more trading volume. And then I'm also getting the fees mostly for that pair that I'm voting for. Therefore, it's aligning my incentives to vote, where I think, the most popular pair is going to be, because it's going to return me the most, the most amount of money. And that's something that you could have humans do. Me as a human owner of these tokens, I can build an algorithm and just say, hey, look, based on this subset of pairs, let's say ETH, Bitcoin, Sol, and again, this is hypothetical because these aren't trading on Velodrome, but I can just build an algorithm that says whenever the trading fees are higher, just switch my votes to that. So now, even though I'm the owner of those tokens, so I, get rights to, the fees from these pairs, I've just built an algorithm to automatically rebalance based on where where the volume is. And you can imagine, and this is where it gets kind of crazy, where these these products are no different from like a Robinhood or a Coinbase, right? Like they're just like a Robinhood or Coinbase is still fundamentally just enabling an exchange of assets, but they don't have these capabilities to allow users or third-party stakeholders to change the product real time. Whereas on a blockchain product like a Velodrome or a Liquidswap or a Uniswap, the users of the tokens can literally change the parameters of the protocol real time. And yes, right now it's mostly humans making decisions and, maybe writing bots and algorithms to implement them. But I think very soon we're going to see more and more decision making being made by AI itself, or algorithms that are, optimizing based on machine learning algorithms or even LLMs. And then, I think probably humans will still be the end ownerships and maybe still be able to change, what their tokens do. But yeah, I think this is like a step towards automating products. And if we think about it today, most products are digital. So like, again, the exchange is a very easy one. We understand exchanges because we all use Robinhood or Coinbase. So like imagine that no longer needing a Coinbase, no longer needing a Robinhood to operate. It's just the protocol deployed, and the owners are the people that have the tokens. They can set the parameters. They can choose to, with the trading fees, pay them back to themselves or buy back the token, etc., or in the cash flows of that protocol or that product. The same thing can be done with Aave. Aave is essentially maybe like a bank where, like, some people deposit. It's like a money market. Some people deposit, and in exchange for yield, other people borrow those assets. but like you could theoretically do this for any digital product, right? So I know it's like a little bit more far out there, but there is like decentralized Uber, for example. If you go on Solana, there's an application called Teleport. There's DePIN networks that are popping up, or can be alternatives to Google Maps and other products, and all these again don't need like maybe like uh a authoritarian kind of structure. Like I think
Hmm.
most companies today are just, for lack of a better word, just authoritarian led by like a CEO or like, a board of directors, right? And the end users, the people that are on the ground floor don't have as much say into like maybe through sure, maybe through um through shares they can vote for certain things like who's part of the board or whatever, but
Hmm.
they can't actually like set the fees. They can't actually change what upgrades get made to the protocol itself. So I think this is like a fundamental this is like the paradigm shift that happens when you build products on blockchain, that they can literally operate autonomously through these tokens that are owned, by humans or owned by robots. And the parameters that get put into those protocols, when made accordingly, can actually run these decentralized autonomous organizations. And
Hmm.
I don't think it'll happen overnight. And for now, it's mostly still set, like most of these parameters are still set by humans, and there's security councils and vetoes and everything, because governance attacks are still a pertinent issue. But yeah, it's very interesting to be kind of like in the midst of seeing this actually come to life, and I can definitely envision a future, maybe not even too far from now, where fundamentally like most products are not even run by humans, right? Because if you automate the parameters, if you automate what the product does, the decisions that need to be made, and then those decisions themselves can be done by other machines, input all the information. For example, risk setting the risk parameters for a credit protocol. Right now, that's mostly humans. Like, okay, how much is an individual allowed to borrow? Maybe there's some algorithm that goes into that, informs like whether you get a credit card loan or not. But for the most part, especially for something like Aave or something like that, it's informed by data, but still decided by humans. But you can imagine a future where that's entirely automated. These parameters are set by token holders. So token holders, which with humans or machines behind them, can essentially just operate this protocol, and this protocol becomes more and more autonomous. And at some point, we might not even need humans at all to operate them. So yeah, it's kind of crazy, but I do see a future where more and more products get automated, and this is literally like the forefront of automation, which I'm sure people have thought about and have been talking around about for a long time. But seeing kind of like how it can be done, and being at the grassroots of it getting built is like pretty interesting. And it'll we'll see what it looks like in 20 years.
Yeah, no, it's super fascinating, and I think most people would agree that the way that the corporate structures are set up with shareholder voting in traditional companies on the stock market right now is by no means fast, efficient, and perfect. There's so much automation and blockchain governance that can come in to improve that. It's great to see that happening. And thank you for all the insights into that. It's crazy to think that you can own a bunch of shares in something, but then you have to vote for who you think is best to make the decisions for you, instead of actually just being able to make the votes yourself through decentralized governance. So I'm looking forward to seeing how it all plays out. I want to zoom into right now and in the next coming months with the Liquidswap AMM is releasing the governance token. I'm sure there's a long plan on how to implement all of it, because it's a lot of things to do to run a company. There's so many different functions, and to program all of that, it's a lot of work. But what are some of the first steps as the token gets launched? What will be some of the things that people can do to help shape the protocol?
Yeah, definitely. So initially, you don't want to hand over full control of setting parameters, to just be implemented on chain as people vote. The safest way to do this is have an on-chain mechanism that updates these parameters, but still have veto power or a security council essentially have a period of time where they can roll back what they see as potentially a governance attack. So we'll be transitioning to have certain parameters such as fees for individual pools be put under this. And then there's other components that can be put up for governance. And again, you want to do it in a way where you let the on-chain governance happen, but then if have a period of time where if deemed by appointed or elected security council that the governance update is malicious to the protocol or overall malicious, for them to be able to veto that. So another example would be protocol upgrades, for example. So you could have protocol upgrades or the upgradability of the protocol be set by the DAO itself. And when someone ships code or updates it, the community can vote essentially with the tokens to say, yes, let's put this on chain. This will be the new version of the protocol. Now you can see how this is dangerous if, let's say, someone upgrades it to malicious code that just can withdraw all the funds, right? So that would be a case where you'd want a security council to be able to inspect the code, make sure that it's gone through proper audits, and that can be, for example, a heuristic that you use, right? Like the code needs to be audited by a set of reputable auditors before it's put on chain and upgraded. Similarly, parameters for fees, like for example, increasing the fee for a specific pool, let's say like a very volatile asset like a meme coin, whereas something less volatile like a stable coin. You can have even built-in guardrails so it doesn't go off the rails, and those can also be set. And then just let people kind of like pick between these guardrails. But yeah, these are all components of the protocol where you can have community input, and then the community votes go to make changes to the protocol itself on chain. But you still need, again, it's very important that you still need a security council or some form of veto power in case there is governance attacks. I think potentially, and I don't know if you ever want to remove this guardrail or safety rail. But you could potentially right? If over enough period of time, it's trusted and there's systems in place, like maybe you can, like, for example, maybe from a trusted set of auditors, if they on chain commit to saying, yes, I audited this code and it's a hash of that code, so for sure it's that code, that could be implemented so that, protocol upgrades go through these audits. But then I guess you could argue that then the auditors themselves become kind of like the security council. But yeah, there's ways where you can start to remove these guardrails, but yeah, over time, I think it's we'll have it be more possible, and you do need like a responsible transition to full automation. Otherwise, things can easily go off the rails. As I mentioned, like you could have an upgrade that can just be detrimental to the protocol or set the fees to a point where like people don't want to trade anymore, etc. So yeah, it's interesting, and you need to do it in a way that's responsible so that the protocol itself can have long-term sustainability.
Yep. No, that completely makes sense. And there's clear benefits to these updates, but there's also a transition that needs to be made because there's a lot involved to make sure that it's done properly and that people adjust to the evolution of it. But I feel like a lot of people are interested in this because obviously they're going to have a lot more control with their votes or their money on how they can control the protocol and potentially benefit the ecosystem and themselves. So what is the best way for people to learn more about this and to start testing it out or getting involved as the token launches, as they can sort of figure out how they can participate more in the governance as it evolves?
Yeah, definitely. Follow us on our socials, Pontem Network. We'll be putting out information. I encourage people to get involved with existing DAOs and existing token communities so they can see what the process looks like. Oftentimes, if not all times, it should be through public forums. People post ideas. if it's code that's going to be implemented, the code is posted there, and it's if it's gone through audits, gets posted with audits, etc. So yeah, it's supposed to be a public forum where everyone can contribute, anyone from the community can contribute. Oftentimes there's minimums. If you want to put up a proposal, you need some minimum amount of tokens to be able to have it go up for governance. So yeah, I encourage people to get familiar with already existing DAOs and how they're operating. Some of the blue chip Ethereum protocols, I think, do a really good job at this. One that's very important and likely going to be implemented soon is the fee switch for Uniswap. So as I mentioned earlier, a lot of these protocols are very similar to existing corporations, except that they're run fully on chain, and technically no one can shut them down. So even if a state level actor, China or the US government or a coalition, like NATO, wanted to shut down Uniswap, they really couldn't. But the governance token holders are responsible for what happens for, let's say, the fees that Uniswap is accruing. So Uniswap, as we know, facilitates exchange of assets, and you could put, right now it's 0, but the treasury could accrue fees through a small fee. And then the token holders will have access to vote on what that treasury does. So it could easily buy back the token, which drives the value of their existing tokens, or distribute those. And those are essentially cash flows, as a Coinbase would have, et cetera. So yeah, it's very interesting. I know people don't like to make these comparisons because that's essentially looks a lot like dividends, and there's like this conflation between securities and tokens and security tokens and all this. But I think it's fundamentally a different thing where, again, you're enabling people to actually, so let's say so this is the difference. A protocol itself, when it generates cash flows and revenues, you don't need to trust an intermediary to give you those cash flows because it's all coded. You can literally inspect it yourself and know that if I have this token, and the code says that I should get this much amount from what the protocol is generating, I don't need to trust a third party to distribute those dividends or distribute those cash flows. Whereas something like a company, they could literally be lying about how much money they're making and then promising you to be making you, hey, look, if you buy my share, you're going to get this much money out of what we're making, but they could literally be running a Ponzi scheme. And because it's not on chain, you can't see the money that's actually generating. So fundamentally removing that intermediary makes it so that you don't need someone like a regulator to say, yes, this thing is safe, this thing is not safe. Like literally you can just go and inspect it yourself.
Amazing. Thank you so much for the insights, Alejo. It is an amazing evolution of the traditional financial world into Web3. I'm looking forward to checking out the token launch for Liquidswap and participating and getting involved in other DAOs, as you mentioned. And also, I'm going to check out the updates for Lumio on Sol and the devnet launch. And the future sounds bright with that one. And not just because the name sounds really cool, but I think that being able to launch all these financial applications and other dApps on any chain is going to make it that much easier for Web3 to be adopted and lower the barriers to entry for developers, which I feel like is a major barrier right now. So thank you so much for taking the time to explain all of this. And I can definitely leave the links, as you mentioned, for Pontem Network, the socials to follow along, the platform links as well in the show notes below. And I would love to follow up in the near future as more updates get released.
Awesome. Yeah, thank you. Our goal is to make deploying on blockchains easier and having more and more applications be decentralized so we don't have to trust third parties. So yeah, happy to be here on the show. Thank you for having me again. And yeah, looking forward to the next one.